Hello everybody, welcome to Forex Trade Learning latest video being created on Saturday 17th of September 2017. Um, it's actually early hours of Sunday, sorry, 2017. Um, I want to go over the market because we haven't done this for quite a while, just to put it out there for the latest moves that I believe is going to happen. For those of you who've been following my trades for quite a long time, for the last 5, 6, 7 years, you'll know that, these longer term projections have been very, very accurate. Probably looking at between right 75 to 85% of the time. Whether you look at things like, Australia dollar, New Zealand dollar, Euro dollar in particular, pound US dollar, odd New Zealand more recently, the long high moves of pound New Zealand, pound Australia, Euro New Zealand. Uh, they've all gone pretty crazily high, and like we predicted when they were very high to the very low. So, and then videos have been recorded previously, not edited in any way. They were all done way before the event, and those that have traded with me long enough were there before the market even happened. When we look back in 2000. I think it was 2014, when we're predicting the moves of the Euro New Zealand and Pound New Zealand. And like I said, I've always told everybody, truthfully, I never know when these moves are going to happen, how long they're going to take. Is it going to be 1 month, 6 months, 1 year? But the overall outcome is always pretty accurate. Obviously that brings us to the Euro US dollar that we're looking at right now. And when this was down the lows of 105 and 104, I think it dipped into the 103s. Everybody was calling for parity and below, and I was trying to remind people that the 120 level was a huge breakdown. No matter how long we go back into 99, 99 here, 2003, 2004, 2005. 2000, end of 2005, early 2006, a little bit higher in 2008 before the big market, after the big market started to crash initially. Again in 2010, and again in 2012. 120 was pretty solid support, for the last 10 years, at least, going back 13, 14 years there as well. So I did say that, the market more than likely before, we look to test the areas of parity, if that is where we're going to go, that we would be coming back to test somewhere in the region of 120 and probably slightly above. The market, the euro dollar does tend to extend further than the levels themselves. We look back here, where we extended to 122 when it came through. We look back here, it extended to 125. When it broke below, it goes quite extreme way below. Remember, we're looking at this on a monthly time frame. And there's a number of things that I've looked at recently. And, I was looking at this chart earlier on the day before I started this video, and if we were to draw something in, if we did look at this at the head and shoulders, so there's your left shoulder. This would be, your overall, let's say the head over here, and this would give us what we call the right shoulder. And generally, people always draw the necklines fairly straight. So let's just say we draw it in here, so it did crack the neckline. We're right back on that neckline now. Let's end up with the chart more in depth. A lot of the time we do also get a slope and neckline, and that is something that actually looks like we have here. If we draw it in approximately across here, that would be the slope and neckline, from the left shoulder over here until the right shoulder where it completely cracked. And that's where it really started to break down. Once this bar here opened and closed below this low over here, back in 2012, that's when the market really took off. The next monthly bar was blood red. It went from 120 in 1 month down to whatever, we got 900 pips in practically 1 month. which is one heck of a move, you know. So when we look at it on this side, you know, we broke down through there, and about 80 to 90% of the time, when we break through a major support level, we will come back to retest that level. That is just, you know, how the market always works. We retest a lot of the broken support or broken resistance. And again, as a lot of you have been trading with me for quite a while, what was one support will always become strong resistance because it's taken the market, you know, time to get through there and a lot of effort. And normally the longer it takes for the market to get to something, which means it was, you know, extra strong support, means it's going to be pretty damn hard resistance too on the way back up. And obviously vice versa as well. What was once resistance will generally, you know, become support. And that's accurate in about 70 to 80% of cases. So, you know, when I was telling people that it looks like we are going to come back and retest the 120 level, we have done so. Okay, so we've gone from the 103 to the 120, a move of 1,700 pips. Again, a fairly large move. So obviously if we're going to come back, we're at the 120 cycle level resistance, which has been there for a while, but like we said, because the market thinks to overextend a lot of the time in this euro, I'm thinking that, you know, we can make it up into this support area. This is obviously resistance area, you know, from the breakdown against this slope and neckline from the broken head and shoulders pattern. And there's a couple of other things I look at as well. I do some, you know, I very rarely use the Fibonacci, as again my traders know, and I prefer the chart to fairly naked. But if we were to look at this and draw some things in, this is the swing high to the swing low from 160.27 down to 103.44 lows. We've gone through a 22% retracement, and if we look at where the 382 fib is, which, you know, a lot of you have been trading for quite a while know the 382 fib is a very popular level, as is the 618. So from the swing high to the swing low, the 0.382 fib comes in just slightly above the slope and neckline of 125.06, which again is another major cycle level as well, you know, 125. And again, those again who've been trading a while know that, you know, the best way to draw these fibs is to try and get a fib complement. So from other swing highs to swing lows. So let's draw the second one, which is the most recent swing high, swing low, from 139.72 area down to the 103.44. We also get a 618 fib slightly above the 125 area. It comes in at 125.78. So I put that in as well. And because these two highs here are fairly close together, that, you know, the fib levels are going to be fairly the same for each one. But if we do another from the medium swing high to the swing low, which is from about 151 to the 103, we get a 380. Sorry, just get this one. We get a 382 fib just approximately above where we are right now, which is 121.73. So, you know, there's a few pips higher, you know, from where we've been. And then above that, you get another confidence level of the 50% fib at 127. So I'm going to be pretty hard on saying that if we can make it somewhere in the region of here. Now this is a monthly chart, so, you know, it's fairly open ballroom. So anything from about 125 to the 127 area, and we get a significant confirmation on the slightly lower time frame, so the weekly time frame or the daily time frame. What do I mean by confirmation? I mean, you know, a pretty strong sell bar, you know, where we make a new high and then close right at the low. I'll be pretty determined then that a top is in place for this pair, because there's no point in guessing. You know, the market can always go way beyond what we ever imagined or dreamed. So I don't see the point in getting the market that, oh look, we're hitting 120. Let's just short it for the sake of it. There was a couple of signals. I think on the market open last Sunday, there was a kind of small double top on the daily, you know, with a daily sell bar. And, you know, I did say to a couple of people I spoke to that you could go short here with a break underneath the daily sell bar, with a stop above that high, and try and look for risk reward up to 3 to 1. This risk reward because, like I said, we're in an uptrend right now, a corrective uptrend, let me say, and we are trading against the trend slightly, so with the risk reward of 2 to 1, 3 to 1 would be fairly okay. And I think what we did is we looked to get in the trade and we locked it in fairly quickly. Once the low of the bar broke and started to move in our favor by 80, 90 pips, I think we quickly lowered the stop to reduce the risk and then eventually get the break even. Because of the type of trend that we're in, it looks like we can go potentially 5, 6, 700 pips higher potentially from here. Okay, so that's what we're looking at. We do have a long-term trend line support. Going from here, this is where it was previously, which we did break it. So generally now we do redraw it, bring it in here. So from anywhere over here, and you go back into the 105s and under 107 to 105 is going to be fairly tough support right now because of this double bottom over here. But if the market was potentially bust through there, then there's nothing stopping us until we get down to the 85 level. There's no other. Okay, there's one little bit here. Let's say at 95. Potentially, we would come through and hit up here. And again, because this would be long-term trend line support, if we did break, I'm not saying this is going to happen, and if we did come through here, generally, because this is such a long-term trend line, we would snap back to this broken support over here, the 105s, 106s, something like that. Before then, we would continue down to this 85 level, if that's the way the market's going to go. But this is a monthly time frame. This could take, it took from 1995 to 2001 to do this move down here. It took from 2001 to 2007 to make this up move. So this could be 1, 2, 3 years away before this was going to happen. I'm trying to give an idea of that. I prefer to be, I was long over here saying that we'll probably snap back to this broken support, but now I would rather be looking for short opportunities when the when the market comes to a price point that makes sense and gives us a good entry signal there. So that is something I'm looking towards. So let's just drill down on the slightly lower time frames so you can see. Just zoom in a little bit so you can see it a little bit clearer. So this is what I'm looking at right now. Look, we had a nice weekly sell after we broke 120. But there was no confirmation. That was the bar. The bar was perfect. I mean, you couldn't ask for a better weekly sell, but made a brand new high, bust all the stops below above the 120 psych level, as we call it. But did we get any follow through? Absolutely nothing whatsoever. And if we had got some follow through, we probably would have been capped at around about 116 to 114 because of this kind of triple bottom look over here in this broken resistance. Now we're going to look slightly supported, so we could move down to here to bounce off 114, 115, somewhere down here, and then carry on up to the 125 to 127, somewhere in this kind of area. But we didn't. We had the sell bar and then straight away it was wiped out, made another new high. We tested it over that bar, but then closed halfway up. So the market is confused right now. The market is being heavily sold off every time we try to go above 120 because of that spike level, and heavily supported because of this the buyers below here support. So it's a little bit mixed, difficult to get too involved. It's too big a position sizing. This is a slightly double top that I said. Look, at a top here, we broke the high slightly and put in the pin bar. Little bit of follow through, which is down here, and now it's snapping back. So just need to keep a close eye. Either, like I said, it's going to continue up to. I know when we say this, I said, well, look, you're saying both sides of the market. I don't know what it's going to do. and in trading we know nothing for sure. I'm waiting for confirmation to tell us what's going to happen. Right now it's in a massively bullish direction uptrend. It's not stopping. It's a massive short squeeze in the market, and we could potentially, as I said, go to that 125 to 127, or we could correct, into the 115, 114, which is where it will be supported temporarily. Then bounce off it and look to go higher before the correction lower. So it's very difficult to tell exactly what it's going to do. So we need to keep a close eye on euro, US dollar. I don't want to say too much more about that right now. What we can do is, because we're looking over, the euro, we can go into the other euro pairs. Now Euro Canada, it's something that I've said quite a while back, that we put in a bearish pattern on the longer time frame. I think it was a weekly chart we looked at. Is that this looked like to me like a double top on the weekly. So we had this, we had a massive up thrust here, through 160s, really short squeeze on people. But it also gave me the impression of a head and shoulders pattern. Again, which is very common, and especially mean a lot more on the larger time frame. That would be your left shoulder, that would be your head, and all this here will be your right shoulder. And if that was the case, that would then tell us that the neckline was somewhere through here, which we broke, and we massively came back up from against there. But what we're seeing now on these on that weekly time frame, month is very bunched. And on the weekly time frame here, what we're seeing is that this kind of support level, which is always coming around about here, starting to break. It's attacked once if it has snapped back very heavily on this side because of the rally in euro. As you've seen, US Canada has been very weak. A lot of Canadian strength, and euro Canada has been unable to fall purely because of the euro strength. But I'm looking at that. We are cracking another double top and breaking the neckline. So this is the second double top on the weekly time frame at a lower price level than the previous one. So it's a double top over here, as you can see there, and the neckline for this double top is about 145, at a slight level there. We've dipped below it once, we've dipped below it again. On the daily chart here, and you can see we had a beautiful sell bar went there. That snap back, another sell bar breaking the line. I thought, okay, this is the continuation move going down. We made fresh lows. We've bounced back. We've actually broken the highs of the previous 3-day bars. Potentially, I'm hoping stopping people out. I'm just waiting for confirmation to get another inside day bar, something like that, to sell below the low of that particular bar. And something to take us. I'm not looking for a massive move, I'm looking for a move into this 142 or potentially into about 140. Somewhere here that makes sense where the market will be supported again. So I'm looking for some kind of sell signal in here. I can look to get short and trade it into for 200-300 pips and potentially build it lower. So we can get it down here and then take half, 3/4 off the table and lock the rest in and look to trade it into 140 cycle level. So again, I am thinking this short at the moment. That's what it looks, unless this is negative by breaking all this high and bouncing on this side. So then we need to keep a very close eye on Euro Canada. We look at the other euro, the euro yen. Just type it out here. We're doing very well here. Okay, so the euro yen is gone absolutely Same again from 114 to 133. Excuse me, it's quite late here and I'm a bit tired, but I'm trying to do this so that this recording will come out there before the weekend opens. Now, Euro Yen on a monthly time frame, you know, because of the US Japan, going above parity in 120, this led to this huge move here. And we have like this monthly double top where the high here broke. And once we give way underneath this 150 level, this 1 month here, go from 150 down to 113. That, what a move that was in 1 month. See a move like that of 4,000 pips nearly. You don't see these moves very often. It's like in one day it went absolutely crazy, and they're the days that traders dream for to make a lot of money. If you're reading the market correctly from that particular side. We snapped back. We came down right back into previous support levels just below 100 and to the 96s, and the market rallied like crazy. But what have we done? We did something that we didn't quite reach it, but what we did do, what I told you, that when support is broken, this level over here, when it's broken, what do we do 90% of the time, 80-90% of the time? We retest that level. And we came, as you can see, the support drilled into the lower, where them spikes are. Exactly what we did. This was supported up here, the double top neckline that broke, and we've retested it. And in retesting it, we've done something very similar to the pattern here. That's where we see the double top. We had, where this broke the high level that stopped everybody out before the market reversed. And generally, before a market happens, you will confuse everybody, make new highs, or make new lows, and that could be, turn the market around. Look what we're doing over here. This would have been the people who were short. Oops. People who were short in the market would have had long-term stops above here. So all we did was this price action here, stopped all them people out. We tested the previous double top broken support. It's made its own new double top, as you can see, and again broken neckline underneath here. So it came through. We tested very deeply. We tested it, broke, spiked through, and we've come down again. Had another huge fall, and now we're bouncing. But for me, on this particular side here, this is a downtrend. It's a double top, a bounce retest, another double top, the down move, and this is just a snapback. So I am potentially looking, very shortly for this to go short again. Exactly when, I don't know. Looking weekly bar close very bullish at the moment. Looking on this bar was confusing. I made a new low, shot to the high, went through the 133. Probably triggered quite a few stops. So, because again, if people were going to short it, say they shorted here on this bar. Look what happened here. It just got stopped. And here, it stopped. Put another sell loss. People who would have shorted it on this side, just being stopped here. Okay, people who then thought, look, this is like a triple top going down. They got stopped again. They thought, okay, we shorted again on this bar. Must be it this time. And then what do we do here? Kill them again. And go through the 133, which more than likely would have been what we call an option barrier. 132, 133, the round type numbers are generally option barriers that tend to get broken every single time. There's an incentive, there's a lot of money behind taking out an option barrier that's put in place. So this here, by taking out the low first and then taking out all the high, it tends to be that we trigger people short and then kill them. So I'm potentially looking at this now as a short. I'm just waiting for a signal to get inside this particular trade. the steep trend line now, which was drawn here, which did break initially, so we redraw it, and we get something like this. This is an extreme trend line, and once we crack, we have two support levels. That's very clearly seen on the daily chart. One is here, at 126, and one just got a little bit lower. This is where it tried to go through at about 124-ish level, and this consolidation area for the breakout. So these are points that the market will always look to retrace to. So we had here resistance, can draw it in if you want. Resistance. You can quite say resistance. Over here you had consolidation. The market consolidated in a range, and now you're going to have resistance. So that's what we really have right now. Okay, so exactly, I can't tell you where it will stop, but we can say that's quite definitely that this was resistance, which will now become support. This was consolidation here. The market will have a little bit of, because it built here for so long and there was buying and selling. If the market comes back down there, it will be difficult for it to pass on the first time if it was going to go any lower than that. But we don't need to be that right. We're talking to move from potentially about 132, 131 down to 126. That's a 500 pip move, potentially maybe a 700 pip move. So I am keeping a very close eye on euro yen, euro US dollar. That they're all coming into potential short ranges right now. Not saying that euro yen can't go higher like we looked on this bar here. This is a weekly consolidation on here before it broke down. So so the market can retest into 134, 136, which would give us a theme of the euro US dollar going higher. So I'm looking something in this particular market. I'm waiting for a confirmation signal. I have the overall pattern that I think it's a short. I'm just waiting for a confirmation to get in. I'm not going to sell the market and let it go 300, 400, 500 pips against me and sit there herding like mad to try to get in. I want a confirmation back. That's what a real trader looks for. They read the market, they read the patterns, they read things that are going on. Overall in the market, like one big book novel, from start to finish. They don't just look at one pair, one time frame. They look at all pairs and all time frames to try and understand the overall market. And then finally, a good trader will look for a confirmation signal before getting into the trade. They won't guess where to get in. They let the market tell them where to get in the particular trade. Okay, so again, euro yen looks to me potentially like a short. So euro AUD as well. I can't remember you guys. I'm still. It's drawn for no reason there. Okay, yeah, I mean this trade, it looks short. Okay, I think I've said this for quite a while. It looks to me short. It keeps putting in these patterns, but it's getting stuck. So you have like this. That's like a head and shoulders pattern on the weekly back over here. Okay, this is one of them. Over here, when we broke it, so we tested, came up, and now we have a double top pattern over here. The reason it was difficult to tell what this particular trade would do, I remember putting this in a video last time, is that first of all, we had an inverted head and shoulders over here, so your left shoulder, I'll draw it in just so you can see. if we're looking at patterns that are driving the overall direction of the market. So we go back to 2013, and we say that we put this inverted head and shoulders with the neckline above here, yeah? And once we broke through, there was no going back. We went from 130 to 145 very quickly. You know, slight pullback and then went again. We put in a double top in action, which corrective, we came down and then we made new highs. Now, the thing is, we went from 116 to 157 and then 165, and now we're putting in a double top, and the market keeps getting supported at this 145 level. This 145 level is a nightmare. It is a nightmare. And there's a reason why it's a nightmare. Because if you look over here, if you look over here, if you look here, and if you look at the consolidation here, right again, if you look here, if you look here, again, if you look here, okay, and you look here. So, how many times? Again, if I can draw this arrow in all day long, but you get in the picture that this 145 level is a major level for this particular part of the market. It keeps coming back to it over and over again. We had another attack at it, very recently in early 2017, when it was July 2017. Couldn't pass through, but what I'm saying now is we potentially put in another lower double top. So we have the overall double top seems to be guiding us, and we put in another one here. So I am really thinking that if we put this in a little bit closer. Right now, so we have this sell bar here, made a new high above all these bars, stopped everybody out. Sell bar, try to go lower, failed, try to go lower, failed. I'm looking for the next signal, get us in on this particular trade. So hopping around. Now, what we've just done here, which could be the catalyst for it to move, is that 1, 2, 3, 4, 5 previous daily highs have just been broken. And like we said before, a move normally makes, you break the high like we did here a little bit, just to confuse people. You have to break confusion. In order for people to get short, we do need people to be buying. There's always somebody on the other side of the trade, so they do have to be encouraged in some way. A bit like before we did this up move. Look, we broke below the low. We encourage people to sell. It's going to break down, and then we snap back and ended up breaking the highs over here where people would have been short. So this is all just a confusion game. It's always been in the market, always will be. I'm hoping that this is potentially over. We put in some kind of inside day bar, sell bar, so draw this in red, so it stays within the range of this bar here. And then once we get to break the low of this bar, if it does something like that, if it breaks through, I will be looking to get short Euro Australia with a target down to about 145 now. Somewhere about there, and potentially beyond. Maybe about 143 maybe. See how far we can go, but that's what I'm looking for on Euro Australia. Now, Euro New Zealand, I will come back to the Euro trade as to why I'm thinking short as well. There's something else. Like I said, we read the market as a whole. It's obviously based on Euro one side and Australia on the other. And if we're correct about Euro getting weaker, I believe Australia may make it stronger after this on the chart. I can say that. And you're looking at Euro New Zealand right now. I don't want to look at that first. Euro New Zealand was one that I said I wouldn't trade last year because it's just there's no pattern as to what's going on. There's no inverse head and shoulders down here. There's no really potential double top unless you look at this is not a proper double top, so that's why I never called it one. This here, look, So that would have been the top second pass. This could have been the neckline that broke, which doesn't look like to me what's going on. And everybody knows that I like New Zealand short potentially. I mean Euro New Zealand higher. And look, when we had the Euro Australia move that went crazy, you know, when I called the four crosses, we call them long, which is Euro odd, Euro New Zealand, pound odd, pound New Zealand. A lot of them went ballistic. Pound odd went ballistic, Euro odd went ballistic, pound New Zealand went a bit ballistic. Euro New Zealand really didn't. That's a little bit strange. I was somewhere over here. I was calling for Euro New Zealand to go to 1.9 or 2.0, I think, and we came 180, 185. Didn't really do anything. Now potentially, um, we could look at this as a left shoulder head, right shoulder, neckline above about 170 psych level, or you could look at it as a double bottom over here. So the neckline then is right up here. New Zealand is a bit of a hard one. It is going to depend on see what happens with the euro and more importantly what happens with New Zealand dollar. New Zealand seems to be a bigger driver of this euro New Zealand, so we just need to watch. Can we get the pop in euro dollar that we're talking about, and also a little bit of weakness in New Zealand dollar, which might give this a catalyst to go higher first. I just don't like it to trade right now. Putting in a top in action in daily. Sell bar made a new high, broke it. We're getting a trend line, pretty extreme. This is how you would normally do the trend line, but you can do it a little bit tighter. We're just going to flow back into here. I don't know. I don't like you and New Zealand to trade or tell you, which side to take. I don't really have an overall bias in this particular pair. What I want to look at now from our side is to look at things like we've looked at Euro New Zealand, Euro Australia, Euro Yen, Euro Dollar, Euro Canada. I want to finally take a look at the Euro Pound, which I think may have stopped out. Oops, didn't spell that very well. Okay, so Euro Pound has just been killed in the last period. It has just fell off a cliff. I mean, that is one hell of a move. It's basically in 1, 2, 3, 4, 5. In 6 days, it's undone nearly 2 months of rise in 6 days. And that's normally a key thing to a huge market reversal. We look on the monthly. That is a nasty monthly sell bar, right in a place of mega long-term resistance. We snapped, made a new high. Look, I said before the market turns, a lot of the time we will make fresh highs to confuse people, and the market tanks like mad. We have this huge sell bar. We didn't get much follow through the last time we got one, probably because they knew it was going to make a double top and come back to test resistance. I mean, if this closes like this, we're only halfway through the month, so it's very early days. There's still 2 weeks left to go. If we close like this, we will be looking for some kind of pause in action next. We don't normally get the follow through. We get something like this, after a huge sell where you get pause and maybe an effective bounce. So just something to wait around for the market before then. Like here, big sell bar, pause in action. We waited around and then a bit more follow through, retesting. We normally just jump around a little bit again to confuse people. It's that's just a sell off because the resistance is going to continue its uptrend. I do really potentially see Euro Pound going much lower. Into eventually 84s and maybe even 82s from there. So I see Pound being stronger than Euro across the board on multiple pairs. You look at this on a weekly. So that was a perfect bar, went to the high for a weekly sell, continuation. And right now, look, the reason I'm saying is that are we going to close at this or continue any lower is that we're right on the support area. Look, when the market tried to break out a couple of times, it pulled back into that support. So you need to watch to see what will happen, or maybe it can bounce a little bit in the days ahead and then come back down to the close with a huge monthly sell bar. But this is not the time to be shorting right now. We're waiting for a corrective bounce or a pause in action. The market to pause, take a breath, and then just tell us which direction it wants to go in. So euro pound, just need to sit and watch it for now. So we'll move on to a trade that even though I've been calling this for quite a while. This euro New Zealand, Australian New Zealand dollar. So it's been in a long-term downturn from another 136 down to just above parity, and now on the weekly, monthly don't really say it so clearly, but on the weekly it was probably one of the most clear inverse head and shoulder pattern you'll see. Very clear one, with a perfect left shoulder, perfect head pattern, and this was the right shoulder here. That's what we thought, and we knew the neckline was did about 111, 112. We were just struggling to go back through this again, but this whole thing, this whole area could have been the right shoulder. This whole thing could have been the right shoulder over the long term. Nothing like that. And the neckline being at this, this 112 level. Where we're being constantly, but we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 passes. Genuinely knocked on the door so hard, over and over again. It's just a matter of time before we go through that levels. And we know the people who are short, they're going to have their stops above, like the 113, the 114, and even more so the 116 in this consolidation, where we made the downward, we paused for a little bit and then it cracked through it, came back to, retest it. So, my target, even when we were at the 102, 104, whatever, we have a couple of entries already still in the market from 104, 105 area, the target being to 116. What I can say is that, like I said, I very rarely look at the moving averages now, but 200 one in particular plays a massive role, as everybody knows. It's a very large support. I can put it in now. So you can put it in. Okay. Change the color. Okay. Perfect. So the 200 moving average there, that it's been in a massive downtrend, and what you generally see, you can see it's starting to straight out. So normally what happens here is that the idea to go with that. I'll try and go with free hand. Right now you see that it'll go straight and then it'll start to curve and rise. It means that if the market ever pulls back into this, because it's on the rise, it will become support. And another reason as well is that you can see this level here was also supported. Now you can see that this 107 108 down to about 107.50. I think I drew it in as I looked at it more in depth earlier. This would be massively supported, so the market can go back, for a breath into here, before then we continued on the 116 target. If I do it on a daily, you can say that what's going to happen is that you can see the weekly 200 MA, we do it above here. What you're actually getting on this side is the rise in daily 200 MA. It's already in an uptrend that it's going to come up over the coming days, and it's going to sit somewhere like that. So the daily 200 MA will meet the weekly 200 MA, along with the supportive areas. The 200 MA is one of the biggest and most well-known moving averages. It's unlikely the market is going to go through that. So it's going to pull back. If it does, hopefully, I'm hoping that we do get this pull back into 107, into 107.50, something like around about there. Anything from like 108 to 107, and I'll be looking for a buy setup to get long even more of this market. It looks to me this has been one of the better trades out there. We had this huge sharp move. We initially went through 200 MA. Again, to go from 104 to 108, we pulled back, sat on it, tweaked a little bit. I think we're going to go back below it, and then we just absolutely took off like a bat out of hell. So it's been a really good trade I've been looking at for a long time, and it eventually came up. So my traders know that we're praying for a pullback into this particular area before we look to get long again. So it looks very good. Look at Australia itself. Because Australia and New Zealand have been so strong, this is why you've had Australia dollar looking particularly very strong too. There's only just okay, again, yeah, we had this big top here. The market eventually, broke below the 95, retested, and then broke down again. And pulled down here. It's pulled back to this monthly 200 MA, broke the high low bit. And these are generally bearish moves. When you get this move down, and there's just slight pullback like this and like a small tunnel, it's only a matter of time before the continuation comes down. But that's on a monthly, and especially because we are New Zealand, that tells you that Australia is going to be stronger than New Zealand for a little while. On a weekly time frame, something that I saw a while, and I did call this long. We had this double bottom, look over here, double bottom here, and with a very strong neckline. Yeah, look, this is textbook, this one. 78 is where the neckline was, consolidation price action. Market broke through, we tested it to the absolute pit, and it's continued higher. It's starting to clear this consolidation. Pause and action in between tells me that this potentially could go high. There's going to be stops above. Yeah, I think going back when we were at 72, I think we called this 1,000 pip move to 82, and again my traders who are with me, and I do have the previous recordings from the old trade room. They say that this was 1,000 pip move called, back over there. This is where the market was going, and this is where we are. We do know the stops will be above 82. We've got this spike, some stops above 82, obviously more above 83, and we can say when we broke down, the market bounced here, try to go through again before it eventually snapped, which level at 86. So we do know that any move into here or here, if the market overextends, is where we potentially can go through on this particular trade. So the market could extend over here. So at the moment, I would be looking at Australia dollar more as a long than short. If we get the correction in New Zealand, which I really hope we do, potentially means that Australia could just pull back a little bit. So we need to see what happens next week in the news. Overall, I still like Australian dollar long if we can get some kind of signal. The only thing that would violate Australian dollar long is if this was a double top and it would only be confirmed if the 78 neckline would give out. That's what we say confirmation. So top, double top, neckline at 78 breaks it there with the downtrend is human. So that's what I think about Australia. We'll look at New Zealand. New Zealand dollar right now tells me that we're putting in. Okay, it's got to be on a much longer time. Okay, we put in a huge long-term double top, massive over here, and because that was top here, it means the neckline was around about here, 76. And we snapped there, we pulled back, huge move down, we snap them back again, potential double top here, top there, and top here where we just broke the low with a huge weekly sell bar next to it. Now we're pausing. This is when we normally get a huge sell bar like this. Generally the market will pause, breed confusion again. So we have this inside weekly bar. Any break of the low down here 71, 75, and this is going to continue. Which low for at least 400 pips to the downside. So I'm watching this particular trade. Trying to get an entry short. If our New Zealand pulls back, then obviously New Zealand could stay over the strength, which would might violate this more recent move, and we might come up a little bit higher. But again, we're just going to have to wait and see how things pan out. But I can see on the daily as well, we have potential left shoulder head at a price point again that makes sense on the higher time frame, like we said, and it's putting a top in action here. So this would never be confirmed. Technically, we have, if you draw, people normally draw a straight neckline, so less 72 gets completely busted and violated, but we could actually also, because of the shoulder here, we could say this is a slope, which means we have a long way to go before we bust it, and we are going to be supported at 70. That is for sure. It's difficult to go through there straight away, and if we can eventually do them, we could see a move into back down at 68. So New Zealand again, a little bit unsure. We just busted all these highs and on the start. We should potentially go on. Because we've had the 200 MA going up and it's straightened out, so straightened out we can crack below. Get some continuation moves low. We've still got a couple of pound pairs. Pound has been very, very strong across the board when you look at things like Euro, Pound, Pound US dollar in the last few days is very high because of the Bank of England announcing about interest rate rises. It's given Pound a lot of strength after it's been absolutely hammered in the past month, sorry. We're looking on a monthly time frame. We're looking chart, but this is when we said a long time ago we get this snapback, we had this massive downward that we get some move. I think we called it for 2.0 or maybe 210 a long time ago, back in 2013, 2014, when we were part of Forex Trade Room with someone called Michael. Robin Hood and other traders, I did call this, and I know that Matt Parker and a few others, do recall me calling this trade for long. I said before, because it's pound out, pound in euro, euro in and pound out did it, and then resumed its downtrend. Now, obviously, pound has been stronger, so these trades, since pound seems to be the strongest pair out there, these aren't going to die as much, but if odd does go along, then that would confirm that we're going to continue the downtrend in these particular pairs. So we've already had the corrective move up. So that is a pretty bullish weekly bar with a double bottom, so it's not something that you really want to be shorting right now. No way, not for me, thank you. If we get higher into 171 or slightly above with some kind of strong action, could potentially start to look short. Said pound looks strong across the board. It's going to outweigh, how Australia would be normally stronger, so therefore this weekend. I would say that the pound does look stronger, so it's a pair for us to stay away from the time being. Look at pound New Zealand. Again, similar. What we're doing right now is we're right up against some daily resistance. This top of action here, we've just come back to retest it also. If New Zealand dies, like I said, and yes, potentially this would continue high and break through all that. If New Zealand doesn't break down, then the pound will prevail at its strength, and this could continue. I don't like these pound cost pairs right now because they are a little bit late to be looking to get into them. There's nothing really sure. All I can say is that there was this long-term monthly shelf that was sitting right back on top of, we broke below 1 before, came back up with this huge up move into a resistance area over here, collapsed like mad, retapped it, pull back, and now we're coming again to re-attack it. So very difficult to say what may happen. I mean, if pound trend stays and New Zealand does weaken, then yes, we could say potentially top high. This 2010, 2015, with huge consolidation, the market is not just going to pass back to that level now. It's broken it, so any move up will be capped by 2.0, and you could look, definitely short again. So again, I'm staying away from pound New Zealand. I'm trying to think what have we now looked at. Overall, the course of these trades. Now we're looking at pound Canada. Pound Canada now on the monthly again. What we did is we popped up into a resistance area. We fell back down to where this breakout was back in 2013. Look, we have this level here. It's a bit like a wedge triangle. Here, look at the market snapped out of, went crazy basically, and then it collapsed like mad as the market, come back down to this level of confidence which the market could never pass on the first time of asking. And it's put in a pretty hefty monthly buy right now. But again, we're only halfway through the month, so difficult to say what's going to happen. Again, we traded this to the short side last year in 2016. Again, because of the head and shoulders, very typical pattern. You see a lot. There are two patterns actually. I didn't know the one in a moment. But this is your head and shoulders here, and the double top here on this one with the neckline. We already broke through, and we have the two negative patterns over the top of each other. It's massively broke down, snap back, continued down lower. Now for this support level here is only so supported because of this consolidation here. But to me, this is in such a long-term downside. Such a long-term look. Coming down here, this is the pullback. We're putting in a head and shoulders pattern negatively. Already in a downtrend market, which it is confirming the trend to be the downside. We're only supported by this here, so I need to snap back. And this tells me that pound is strengthening a little bit, could go higher, but I will be looking for areas to short this. Get short, it does look like overall. So right now, again, looks like we need to leave alone. looking for things that we can look for areas. We can draw the swing high, swing low, fib in. It's done a 382 retracement already. So we draw the more recent swing high, swing low in. Yeah, with a 382 retracement, 50% retracement. We take it into about 168.50. That is where I see us. We could go another 300 foot higher or so. Break these highs here, and then we do the downtrend. Just need to keep our eyes closed on that. I think the pattern is in place for that huge weekly double top on the head and shoulders growth. So pound kind of the main is a short. US dollar JPY. There is a huge pattern on the it's a weekly pattern. Oops, sorry. Okay, the weekly again, left shoulder, head, right shoulder, broken neckline, smashed through. Guess what? We popped back and we tested broken support, the neckline, which we do a lot of the time. That pattern is still in place. That was just a retest. Had a little bit of follow through, but this month of May, it's always been negative look. It's in a downtrend. We did snap above this resistance here. She's putting her head and shoulders over here. Double top here, cracked. Another head and shoulders cracked. Pop with the neckline. This looks tells me that we're looking to go particularly short in this pound, just waiting for an entry. We can look to get in this particular pair. So again on a daily, what do we look like? Now, you guys have been with me a while. Remember that the yens on every time frame have a habit of breaking the bars before they change, especially on the hourly charts and things like that. So the fact that again we just spiked above all these highs, stop people out, confusion bred. We did it here. It's a small amount, massively reversed. Tend to do it. Did it here, reverse. Did it here, reverse. Did it before that bar, reverse. So I'm thinking, we've come above here, some kind of selling here, and we can look to get short US Japan. Set some yen strength coming in across the board. I'm trying to think what we haven't covered. Australia pairs, China pairs. Okay, now when we look at the more exotics, and if you want, things like New Zealand, Canada being killed, being dead recently. Again, I think this is another one that we didn't really. I think we've been short this. A couple of times I've tried to get short this after, we pushed all these highs and put it in, and then we broke through the support level at 92. So I would like to think we could bounce just that little bit to come back up into this breakdown level and then look to get short. I do like this pair particularly short too. And you bounce up into the 92 area would be fairly nice to get after we have this head and shoulders, double top, huge breakdown, some kind of pullback underneath here. Moving averages going to start going down there. This looks potentially short to me after a bounce, so New Zealand CAD to the short side. New Zealand City, don't trade this very often. Look to me it was putting in a top, broke down, pull back to some resistance area, looking for some continuation of the downside potentially. Does look short, definitely looks short to me. Look for New Zealand, Swiss franc. I don't have a lot of other things. We can look at the US dollar index. This is the only thing that concerns me about things like euro shorts, which means dollar weakness. Dollar strength right now is that this US dollar is at one heck of an extreme. I mean, this really worries me, about getting short. It's very rare you see charts stay like this for very long. In a massive uptrend, which is why you're seeing the market doing what it's doing, the dollar getting stronger over the time, over the longer term, the last few years because of this move. But this really, really concerns the fact that we're coming back into this support here. This will be supported because of this monthly 200 and these previous spike points here, but we're attacking this level over and over again. This here, attacking this and coming to a trend line. If it's ever give way, the dollar would just be fried. It would be killed. The euro, pound, Australia, New Zealand, fly to high heavens. And it's just looking like a top in action. I mean, I don't know about you guys, but it really looks like there's two ways you can look at it. You can look at this as a bottom here, okay, from there. You can look at it like that as a potential megaphone pattern. Usually like this, I can open megaphone and attack at this neckline. If it does give way, then obviously I'm going to be wrong on a couple of other trades, but like I said, because this is coming into a weekly 200 and to pay support, I do think we would hold, and probably we're not just going to pay straight to it. I'm very surprised. We might get a pop back up control, and then the market we're looking at before then it potentially came and broke through. So the dollar index giving us an ominous sign really right now. Trying to see if there's any particular plays on the daily. What we could this could be if we're going to see things like euro fall but pound being changed strength, and it's not going to be based on the dollar, it's going to be based on the news coming out for the pound and the euro itself directly affecting that rather than the dollar index. So we just need to watch carefully what's going to happen. I'm not really sure whether this will come down. Whether this will come down and continue moving from there. So we need to keep a close eye on the dollar index. And the last thing that I want to look at before we go is the S&P 500. Okay. This dollar index is not dollar index, the S&P 500, sorry, is absolutely insane. Crazy stuff. We looked at this as potentially topping and I said, we may pierce through to jack everybody up because people were hugely net short. Now, I'm not sure the current position right now. I don't know if people are still building shorts into this and this is just making new highs. And then when you look at all the stock markets out of the world, it's like, when they have these moves, they have every few years you get these corrective crashes, like this here, and it seems well overdue. So it took from 2000 to 2 years to crash, it took 2003 to about 4 years to climb. The last time we did this was 2009. So we're looking at 2013, we didn't get the crash there. We just seem to have gone a hell of a way without having any kind of pullback, and this market is getting the extreme. So some point I think there's going to be a huge rollover, and whether it's only going to track us back just to this consolidation area, but now we're looking for a much bigger correction into like this weekly, monthly 200 rising MA. It's going to be rising up like this. That's potentially what I'll be looking for eventually. A huge crack in the stock market of the S&P 500. Generally, I always tell people is to look at the other let's see. Look at the UK 100. Okay, the FTSE 100, the UK stock market doesn't go back far enough to actually show us what's happened previously. Yeah, I think there's another one I can do this. So I'm just trying to find a chart where we could actually see it. Not allowing us to show it properly, but we'll just go back to this one. Basically, you had another one back here where the market, like crashed down like that, and crashed again like that, and we think we put in a top in action. I said the stock markets never all crash together. They can crash together, but you normally get one that leads the way. So we had one of the Japanese stock markets crashing early before, and you see them around the world crashing. And now pound does, the UK FTSE 100 does seem to have popped out. When you look at this, so we're here, I said here, look at the new high, probably freaked everybody out. We get a large correction. We do get these huge moves that take a couple of years to happen, but I think right now we are topping out. I think it is time to be looking short. This is the sell bar is inside. We pop below all of that. I think now we just need to wait for a good entry on this. Let's see, look, we're smashing. This is looking real good now. It's this shelf support here from the 7300, broken through the daily 200 MA. It's going to start flatlining. It's been crawling up here. It's going to start. It'll take some time, but it'll eventually flatten out here. So if we can come down into about 7.1, bounce, which we will, up into here and it'll be back into 7.3. 7.3 is going to be a major sell area for the FTSE 100. You can see that UK stocks starting to crash at some point in time. So it tells me that the stock markets are going to roll over in the not so long future. So S&P 500 think short. Once we get a signal, right now it's just slightly higher than continuing. So I'm going to leave it at that for now. I will try and do a few more videos on a more regular basis. You can say I have a lot of views inside the market of what's happening. And our trades making some good profits along the way. The new website online is forextradelearning.com. You can email me, send me your history of your trading. You can put in your experience and whatever. And there's quite a few offers online, for compared to what the normal monthly rates are. The 3 monthly, 6 monthly, and annually. The annual one is huge saving on the monthly price. It works out at $50 per month. Just slightly over that, I think. For 55, 56, $50 a month. But for an education is to learn how to trade and listen to someone else's trade. Pretty fair going. So if you've got any other questions, I have no problem. Send me an email. Go through the website. I think it's sales@forextradelearning.com. There's another one for the contact us page there. You've also got my Skype, which is Chris H9070. That's Chris CHRIS H Hotel 9070. That's my Skype ID. Feel free to ask any questions or anything like that. But some of you know that I'm actually based in Athens, in Greece right now. I'm thinking to start teaching a few people out here that probably don't understand the Forex market in just the same depth, as how I can read the charts here. So, look guys, if you want to ask anything or you want me to go over anything with you, if it was just a chat about the markets, ideas that you have, I'm always happy to do that as well. See what's going on from that forward. Look, I hope you enjoy the rest of your weekend, and until next time, goodbye.